Go folks, Jim here from FX Charts. Thanks for tuning in Tuesday 25th of February. Well, it was another pretty choppy day really for the majors. The euro headed a little bit higher earlier on. The German IFO came out better than expected, took up the euro to up to its highs. But that was about it at around 137 3/4, 137.70 actually. The CPI data then came out, and although the annualised figure was as expected at 0.8%, the monthly figure was very soft at minus 1.1%. So that's brought about more thoughts that the ECB could bring about negative rates, and that was backed up by one of the ECB board members who suggested it's a possibility. So elsewhere, it was all pretty messy, really. Although the Aussie and the Kiwi they had an early soft move down to the downside, but they turned pretty sharply higher later in the day, helped by the US equity markets. But we'll go have a look at the charts and start with the euro. As you can see, that's really tracking sideways. There's not an awful lot to say on it, really. It's at 137.30. It's where it started the week. It got up to 137.70. Back down to 137.07, I think was the low. There's a bit of support here, the 200-hour moving average and the FIBO support. Now the charts are pretty flat, and I'm not really sure that we should expect too much change today. There's a little bit of data out later on, but realistically, I think we're probably stuck between 136.80 and 137.80. If we do take out 137 3/4 or so, then we're probably headed higher to 138, and this trend resistance at 138.30, that's going to be important. If we take that out, then we're heading back to this high here at 138.92, which we haven't seen since December. But I don't think we're really likely to see that today, and I'd expect another pretty tight range-bound day. Dollar yen, unfortunately, that's the same. I think it's traded sideways really here. This 102, 103 range. So today was 102.15 to 102.65, and we're stuck at 102.45 at the moment. So I don't really see too much happening. The momentum is slightly to the top side, but really until we can take out this 102.80 level, I don't really think we're heading too far. And if we do take it out, then we're heading towards 103, where we've got the 50% retracement of the pivot at about just above 103 there. Now, if we break above 103 figure 10, then we're probably heading back up towards this 103.5 level, where the descending trend resistance comes in just ahead of the 103.65, which is 61.8% of the whole move down from this 105.40 area. So that's about it for the dollar. And on the downside, I don't think it's going much under 102 today, and certainly there's good support down around 101.50.60. The 100-day moving average is down around there. It's a bit hard to see, but that's the orange line just there. So that'll provide good support below 102, and I don't really think we're going below 102 today. Sterling, well, that's pretty choppy. It's still correcting this. The up move, it's still correcting that. It got down to 165.80 today before recovering. It's back at 166.5. It's currently running into some minor resistance at the the 200-hour moving average. The short-term indicators aren't really suggesting an awful lot, to be honest. They're kind of running out of steam on the downside, but I think given that there's not really any activity today from the UK, any economic activity, is probably going to be another pretty choppy session, and I think we should probably use 166 to 167 on the wide as a range, possibly capped at around 166.70. Dollar Swiss, well, that again, that tried the downside and then reacted hard. The dollar recovered. That was around the time of the the EU data that got down here. Now we've got a bit of a triple base down here. So as long as 88.5 holds, then I think we're okay. If 88.5 gives way, then don't stand in the way, because I think we'd probably see a fairly quick move down here to 88, the figure. But having said that, the 4-hour charts are looking a little bit better bid, and maybe we do squeeze very slightly higher. I don't think we're really going anywhere too far though today. And the dailies, they have been looking a bit soft, but maybe they're just trying to turn in a bit of a base here. I wouldn't be too keen on either way of it today, but I think it's probably a range trading day. Buy a dip down towards 88.5, but with some pretty tight stops, as I say, left below. On the top side, this sort of 89.15 has been a bit of a trap for it. It's come back quite sharply every time it's made it up there. But if we can take it out, then we're probably headed back towards the 89, 30, 40 area. I'm not sure we've got the legs to get up there today, though. The Aussie, well, that's taken out the shorts a bit. It headed low to 89.37, but turned around once Europe got in, and the stronger equities markets overnight and stronger commodities have seen it push really quite high. It got up to 90.50. It's just drifting off a little bit. The US equity markets closed a bit lower right at the end there. They came back a little bit, bringing the Aussie down with it. Now the 1 hour charts are suggesting that possibly we're rolling over for some weakness during Asia perhaps, and the 4 hour charts though are supportive of further gains. Now we've got to watch out. There's a Qantas announcement today about possibly making 5,000 jobs redundant, so that might take the wind out of the sails. So I'd be a little bit careful on both sides on the Aussie. But if we can take out this, well, we need to take out 90.50 for a start, and if we can take out some 90.75, 90.80 area, then I think we're probably heading a bit higher. If we look at the daily charts, we've got good resistance here at this sort of 90.85 level, and above here the FIBO resistance just around 91 the figure, with the 100-day moving average at about 91.10. Above that would see us move north. We got the 200-day moving average isn't seen to about 92, 92.05, and then we've got descending trend resistance at 92.30. I don't think we're going up there yet, but the market has been getting pretty bearish on the Aussie and is running structurally short. So there is a chance we could get a short squeeze in the days ahead. But as far as today is concerned, I think look for something like 90 the figure to 90.70 to cover it. But keeping one eye out for the Qantas announcement, which may see a little bit of a sell-off in the Aussie, depending on what they have to say. Then going forward to the Kiwi, well, the Kiwi's higher with it. As I've said plenty of times before, I'm steering clear of the Kiwi at the moment. It looks bid at 84 and it looks offered at 82, and it's just chopping around in between. This sideways range it looks like it's going to continue. So I think we probably should continue to use this range. If you can sell it up around 84 cents, it's probably not such a bad idea. Buying it back down around sort of 82.5, 82 cents. If it goes above 84, then 84.30 is this high up here, and beyond there goes up to about 84.5, which is kind of trend resistance. But right now, the 100-day moving average, which is sitting at around sort of 82.75, seems to be acting as a bit of a pivot for it, and maybe that looks likely to continue. I'm not really too phased either way on the Kiwi. So that's about it for today. We've got the German GDP numbers due out later on. Then we've got US consumer confidence. We've got some housing data and some regional Fed US manufacturing data. So that's enough to keep the market on its toes. I think overall it's going to be a fairly choppy one again. I don't think we're going to head too far away from where we are now. I think at the end of the day, the market's probably looking towards Janet Yellen's testimony to the US Senate on Thursday to see what she has to say there. So that's about it for today. Then have a very good one, and we'll talk to you tomorrow. Cheers.